the Twitter posting of either, there's two types of Twitter posters today. Meme coins are going to revolutionize society. Meme coins are, the new culture coin, and they represent the new community in a digital first world. And they're trying to basically play up what these meme coins are. Then there's the other side. Meme coins are the stupidest thing. We're wasting brain power and energy. And they're neither. They're just something that people are trading. And like, stop fucking pontificating on what these things are. I'm sick of all these meme coin hot takes. If you are an Empire listener, hopefully you've played around on chain. And if you have done that, you know that transferring assets across different chains is a pain, to put it nicely. That is why we are incredibly excited to have the Wormhole Foundation as a partner of the Empire podcast, stewards of the Wormhole protocol, supporting over 30 different blockchains and 6 different runtimes. Stay tuned. Later in the show, we have a cool thing that you can claim, which is a Wormhole NFT just for Empire listeners. This episode is brought to you by Monad, which has not only the highest performance EVM L1 architecture ever built, but also the wildest and craziest community in crypto. Monad's internal DevNet is live and public testnet comes out soon. So make sure you join the Monad community today at discord.gg/Monad, MONAD, Monad. All right, everyone, what's going on? We got two tired souls coming in. Santi, what's happening, man?
Not much, man. Just another day. A lot to talk about. A lot of big day today, right? The Wormhole airdrop.
Wormhole airdrop.
So
I honestly have not looked. I'm kind of over these airdrops. I'm a little.
Mert, shout out to Mert. He had a great tweet about it. He's like, yeah, being a maxi doesn't pay because I never bridged from Ethereum to Solana. I never used the bridge because I've always been Solana native, so I didn't get the airdrop. I'm like, that checks out.
Checks out. Yeah, so it's trading at a little 14. I feel like everything's trading in this range of $14 billion. 14 billion slid a little bit since it launched. It launched at what? 1.5. It's down to 140 or no, 130 it launched at, went up to 150, slid to 140. Total fully diluted valuations at 14 billion.
14, yeah, it slid a bit. It was trading in what is it, AVO, secondary market, like
20, 17.
It was between 17 and 20. So these things are fairly accurate. Actually, have become fairly accurate, which is pretty good indicator actually.
So Ethena also launched an airdrop.
Yes,
they launched their token this week, and it's trading at a $2 billion valuation. What do you think is the logic and the decision?
Fully diluted? I think fully diluted is much higher than that. It'll be 12.
No, 2 billion.
Is it? Okay.
On CoinGecko, it is.
Hold on.
Right. Oh no, I'm looking.
I think maybe hallucinating.
I think I'm looking at the stable coin.
Yeah.
No. Yeah, I'm looking at the
It's
stable
1
coin.
billion
16 billion FTV. Yes.
Bananas. It's bananas.
So it's higher than Wormhole. That's wild.
Yeah, people are people are chasing that yield. We could unpack all that, but listen, folks. Just a word of advice here: when you see these things, just pay attention to fully diluted. Pay attention to unlock schedules. There's good websites out there that will tell you when investors are unlocking. You never want to, just for a second there, think about the relative value of something that is 17 billion. Don't get me wrong, like, things can go to much higher and irrational, but I'm an early stage investor and I look at that and I'm always cautious.
Yeah.
I much rather let these next couple, like whenever there's airdrops, I let kind of the market kind of like work its way through it for a couple of weeks as people claim, sell. There's a lot of chaos going on with market makers. So for me, I'd rather just kind of be on the sidelines.
Yeah, I mean, you compare something like Athena 16 billion, Wormhole 14 billion, then you compare that to something like Arbitrum,
Athena,
right? Which is
Athena
14.5 billion.
Than Arbitrum. Yeah. Higher than Arbitrum, higher than Uniswap, higher than Aave, higher than Maker.
Yeah.
People can make
so we got that. We jumped right in. You got the hat on today. Is that
it's freezing in my room.
Are we with hat for a reason or?
I love, I love hats. Someone out there needs to get me this goddamn pink hat. Ansem, if you listen to this, I know you have a guy. Send me that guy because I want it. I just want it. So this is the closest thing.
I'm so over the okay, so I know
Wait a minute. What?
I'm
You're
I'm so
so over what?
I'm so over the Twitter posting of either there's two types of Twitter posters today. Meme coins are going to revolutionize society. Meme coins are, the new culture coin, and they represent the new community in a digital first world, and they're trying to basically play up what these meme coins are. Then there's the other side. Meme coins are the stupidest thing. We're wasting brain power and energy, and they're neither. They're just something that people are trading. And like,
That's
stop
right.
fucking pontificating on what these things are. I'm
Yeah.
sick of all these meme coin hot takes.
Yeah.
Just
Yeah.
let the people
I've
trade.
yeah, I've taken a more simplistic approach to not just meme coins, but just stuff in general. Um, Ultimately, markets are the arbiter of truth. No one really cares what you think. The market just rules, and so people are finding. Look, it's pretty interesting. I shared this with you before the pod. Binance has done more volume. I think it was yesterday. Binance has done more volume on WIF than on Bitcoin. No, I'm not making any conclusions. It's just an interesting data point. Coinbase, I believe, when it listed Bonk, it had multiple days where it just broke all kinds of records. And I'm a very laissez-faire markets person. I think if people are against meme coins, oftentimes like you get into these discussions, right? People are like, oh, I hate crypto or I hate meme coins. I'm like, do you also hate Las Vegas? Do you also hate sports betting, entertainment? And they're like, no, no, that's totally different. I'm like, is it? And so that's always my line of defense. Historically, I've tried to rationalize a lot of things, and I just like to just flip it to something that is very closely related to what they're attacking. Because oftentimes people just attack stuff that really contradicts another thing that they like, and so that's where you corner them, and you're like, all right, explain your flawed logic. So I've done that, and it just saves a lot of time and energy.
Yeah, there's this interesting chart I saw Luke Martin post on Twitter, which is, and then I'm gonna allocate zero more time to this podcast to these meme coins. But there's this interesting point that Luke Martin posted about state lotteries, which is lottery
Right.
ticket sales are at a record high. So if someone's listening to the podcast, not watching on YouTube, this chart is up and to the right, up only. It just passed 100 billion in state lottery tickets in 2023. You compare that to 2010. It looks like we're around like 55 billion. Now it looks like we're about, what is this chart? 105 billion. So that's,
Hmm.
we've doubled state lottery tickets. And this is just, I mean, you see it on the subway. I was on the New York subway today, and there's just
Oh,
advertisements everywhere to go buy lottery
oh.
tickets.
I'll
And
make
that's,
a yeah, like lottery tickets, like probabilistically, the odds of you winning there are extremely low.
yeah.
Casinos too, the house always has a marginal edge. So if you continue to play in an infinite sequence, you will lose all of your money.
Oh, you haven't been at a
Uh,
craps table with me. I got the edge. I got the edge at the
I just
craps table.
yeah, you're
No,
just betting. You bet on red. Just drop it.
that's
Uh,
roulette. That's
oh,
roulette.
roulette. Yeah. Listen,
Yeah.
this how tells you how much I spend on a casino. I live in a casino 24/7, 365. So I don't need to go to Vegas. But the thing I'll say about meme coins that in this discussion, I think it's a healthy discussion to have amongst just the community. Um, uh, and it also tells you a lot about the type of person, right? But one thing that I will say in this discussion around airdrops and projects trading at fully diluted, meme coins are kind of more simplistic versions of like projects. I'm not saying that they have a roadmap, they have utility. No, they're just memes, right? But you don't have this like very low, extremely low float, high FTV dynamic, which has historically been quite hurtful, or not hurtful, but it's just a thing,
Well,
right?
can you? I hear a lot of people say that. Can you, for people who maybe don't know that, can you
Most
explain why that's harmful?
not all meme coins are created equal. For the most part, you look at like WIF, you look at some other meme coins. The entire supply has been distributed. It's trading constantly.
The
It's
inverse though. What's the it's a commonly used phrase. All right, the market cap is this, or but the the
yeah.
FDV is this. That's a harmful dynamic that has played out. Why is that
Uh,
harmful or problematic?
I'll retract the harmful part because again, it's difficult. But
Markets are markets.
the
Yeah.
yeah, exactly. The tricky part is when a project, take Athena because we're talking about it, or Wormhole. They have a billion tokens totally, like total tokens is going to be a billion. They don't issue that all at once. Most projects don't do that. They have why? Because they have an emission schedule. They have certain tokenomics that, like Bitcoin, you're emitting these tokens based on whatever liquidity mining incentives, certain other metrics. Right? Token is the way you acquire customers, the way you attract attention. You do that over time, right? For Athena, it's you want to incentivize people to deposit and earn a yield. The way they're capturing that yield in part is by these rewards that are emitted in the native token, right? And so they're not going to issue that all at once. So you have this dynamic, right, where the project might be at best airdrops like 5% initially, maybe 10%, maybe 20%, but it's a as a percentage of the total token supply, it's quite low. And so when you think about price discovery, it's going to take a lot of time for the market to really come to terms. And usually, for instance, Arbitrum just had their first big unlock for investors last month. So there was some selling. It was trading at 2, dipped all the way to $1.64, it's trading at $1.45. Ahead of that, you saw some activity. And even with the price decline, there's a lot of noise there because the markets have been choppy, whatever. But on a market cap basis, circulating market cap, Arbitrum actually, even with the price decline, it's actually trading at all-time high market cap wise because there's just more tokens out in circulation. General rule of thumb: more tokens in circulation, better price discovery. Low tokens, small percent of tokens in circulation, tricky price discovery for the most part. Unless, of course, you can point to Avo if there's a healthy secondary market, like Second Lane or some of these brokers, right, that they're facilitating transactions, then you may have a better approximation of how these things are trading. But it's tricky. I think, like I'd much rather prefer, seeing a project where you have much more percentage of the total token supply out in the wild, trading hands actively, or you just have a better sense of the true value of that market cap of that project.
Right. Yeah, I agree with that. Um,
Anyways,
so we had three topics on the dock for today. There's these like L2s, L3s. Then there's just meme coin stuff that we just talked about, and then there's airdrops. And I think if you try to basically the through line of all of these things is it's a fight for attention. There's just a violent fight for attention right now if you're a builder. And the like what are airdrops? If you look at like what airdrops are on your I like as a line item basically on your P&L, it's a marketing
it's marketing,
expense,
marketing
right?
expense, yeah.
If you look at meme
Or
coin,
like
so I saw DJ
stock-based compensation.
or
You're giving that to employees, yeah.
sure,
SBC and the
it's
marketing
a
expense,
way
yeah.
to get it's a marketing expense and a way to get whatever you want to call it, but it's a way to get attention. Meme
Yeah.
coins, what are they? If you're a project, like I saw DGen is now launching an L3 or something or another. Like I think actually you're going to see it, or I think you could say Backpack and Mad Lads, like they launched as not a meme coin but an NFT.
NFT
Um,
community.
NFT, and then they started building things on top of it. It's just a way to get attention.
Yeah.
L3s and L2s, like why does I actually want to have this bigger conversation about L3s and L2s, but like at this point, a lot of the technology is commoditized. Why does someone choose to build on Blast versus Base versus Binance Smart Chain versus Arbitrum versus Solana? All the tech's going to get commoditized. It's
Mhm.
user acquisition. It's user
Yeah.
acquisition and attention. And that's the game that everyone's fighting right now. So maybe we can
Yeah.
talk about talk about L3s. You sent me this message this week and you said I don't have much of an opinion on L3s other than they are just not good. So maybe I'd ask you to. That's obviously a pithy Telegram message, but I'd love for you to just like hear your take on L3s.
Folks, if you're gonna DM Yano, just remember he works for a media company and he's gonna always air
You
wandering.
didn't say off the record. You didn't say off the record. Actually,
God damn it.
let
I'm
me tee up
rebranding this podcast to off the
the
record.
I'll tee up the conversation on L3s actually
Yeah,
first,
let's
maybe,
do that.
which is
Let's do it.
that.
Yeah.
So there was a so there's the L1, which is Ethereum, obviously. Then all these L2s launch: Optimism, Arbitrum, Starkware, things like that. There was a post in September of 2022 by Vitalik. He said, "What kind of layer threes make sense?" And I think this kind of woke a lot of people up to this idea that, hey, look, eventually there's going to be L3s and then maybe L4s, and there's actually this maybe I'll pull up this diagram from this piece here. Let's see if I can. So for anyone who's watching on YouTube can see this. So you've got the L1, right? You've got Ethereum right here. Then you've got Starknet. Then the L3 might be StarkX, which is Rollup, or StarkX the Validiums, app-specific Starknet, a different one, privacy Starknet, and then you've got the L4s, right? So if you read this post back from the end of 2022 that Vitalik made, he said the conclusion here is that kind of L3s are good for three things. L2 is for scaling, L3 is for customized functionability. Functionality. For example, privacy, right? That's one thing. L2 is for general purpose scaling, L3 is for customized scaling, and then the third bucket was L2 is for trustless scaling like rollups, L3 is for weakly trusted scaling validiums. And now we're a year and a half later, and you're starting to finally see these L3s come to the market, right? Folks are building L3s. I think DGen launched an L3, which originally started as a meme coin, launched an L3 on Base. You're seeing Arbitrum Stylus. You're seeing Optimism. You're seeing people build these L3s. I'd be curious to get your take on like, yeah, just what you think of these L3s in general.
Again, I'm not sophisticated on this topic. I haven't followed it other than it just gives me a mental uh I'm sure it's one of those topics that I've like tabs open that I don't wanna dive into because it's just I'm not very incentivized. It's just like it feels painful. Um, I'll punt it over to you because I think you may have a more informed opinion here. Like, for instance, Arbitrum style is why what you're saying, and correct me if I'm wrong here, is y- you know if people want to use generalized Arbitrum tech and layer on layer on something more specific, as Vitalik is saying, you like, why can't you do that as a L2? The same way that base is using the OP stack as an L2. Why do you need to like what's the rationale for an L3 or is like it's sort of unclear to me.
Here's my thesis on what's happening is everyone's basically saying, I want the security from Ethereum. So I'm going to use the L1 for security. I'm going to use the L2 for scalability. And then I'm going to use the L3 for control. And I think that's kind of the narrative. And that's what's playing out if you talk to some folks who are doing this. I think really what you're going to see is you're going to see a lot of experimentation at the L3 level or L3 layer. And then you're going to see a lot of like, again, I really think this L2 tech will ultimately be commoditized. I don't know if Arbitrum's winning
Agreed.
or Optimism's winning or Polygon's winning or Scroll has
All of
ZK stuff.
them,
Like
yeah.
it's all gonna be commoditized in my mind. And the only two
All,
reasons that like someone will pick something is the brand and the user acquisition that comes from building on it. So maybe Blast is for
but
more degen. Yeah, go ahead.
Blast is an L2. Base, as we think of it today, is described as an L2. You can bridge directly from an L1 to base. Maybe that's like the simple definition of an L2. Bridging from an L1 to an L2. So base is a fork or using the OP stack. Optimism is also an L2. Base Optimism, there's some deal there where Optimism believe like granted a lot of the tokens to Coinbase, who then decided in their RFP assessing which L2 tech to use, whether Arbitrum or Optimism stack, they decided to use Optimism, and it was heavily incentivized. Is my understanding. They're an L2 though. Base is an L2. Could Base be like in that decision tree of Coinbase thinking that they're going to build something in Ethereum? say that there's the next Coinbase, another exchange. They want to go through the same decision-making process as Coinbase did. Are they going to build an L2 or an L3? Like, why would you build an
Yeah, I don't.
L3 where you can build an L2 using the stack of Arbitrum or Optimism? Like, that's where I'm like, why are you stacking and have more dependencies in an L2 where you can just have the direct line of into an L1? It just seems like there's going to be more friction introduced if you have to make, unless, again, this is where I'm dumb on this and I'm not familiar. If you can hop directly from an L1 to an L3, okay, maybe, but it just feels unnecessary.
Yeah, you got two two dumb L3 guys here. So we're
Yeah,
let's pontificate for a second, just knowing that neither of us are deep in this right now. I think the key word here is bridge. I think when I think about like an L, here's if I'm an L2, here's my vision. I'm trying to get as many folks to uh basically build these L3s on top of me. And I think the an L3 in a sense is like it is cheaper and maybe more secure than running all of these bridges, right? So it's maybe better to then deploy, like the L2 essentially just becomes a bridge. Like I think the L2 in this sense, like let's use Arbitrum, let's use actual things. Let's say there's Ethereum for security, then all these L3s then all these like apps, all these applications want to
yeah.
get built. And then if you believe in the app chain thesis, you say, okay, well then all these apps are going to build their own
But
chains.
yeah, man, but like I get it. But like if you're like Steppen, for instance, or a game, fork the OP stack and build your L2. Heck, why even stop there? Build your own L1. That's gonna happen too. So it just feels like if you go back to the when Ethereum got started, there was the Ethereum killers. The incentive for developers to build their own chain was superior to build on Ethereum because they can launch their own L1, they can have more autonomy, and they could capture way more value. Look at all the professor coins, Thunder Chain, and Avalanche, and the incentive for a developer was very strong to build an L1. If we believe that to be true, even in today's environment, why? Again, the question is, and I'm not sophisticated. I'm just posing the question: why would a project that is worth their salt, that has a good product that is capturing attention, why would they build an L3? Why not build an L2 directly? It seems like an L3 just introducing more lock-in dependency to one particular L2 when the current state of L2 to L2s and L2s to L1s is very fragmented. We're not there yet where bridging easily is
Yeah.
becoming a challenge. The cost point of an L3, I think, is a mute one because you can use modularity again to use Celestia or like so like it's not. I don't buy this argument that an L3 is cheaper. I also don't buy the argument that an L3, like, why would you lock yourself into a particular ecosystem like Optimism or Arbitrum? Okay, maybe you believe that bridges across L2s is going to be great. It just this is goes back to the heart of you want to ask me why I've lost conviction, lost interest in Ethereum, even though, mind you, I've invested in a lot of L2s because I have a very strong incentive for Ethereum scalability to run out of work. I just don't think it's as elegant what matters most here is from a user's perspective. I don't think it's as elegant, as clean as uh integrated chain like Solana or Aptos or some of the other ones. Just not. Maybe the other part of my brain says you're being too critical. Over time, the tech will be commoditized and abstracted away where it's just going to be very easy to work your way around these chains. So this argument doesn't kind of really matter. If the tech is really good, you can hop around and someone's going to figure that out for you. But we're in a state where we have to think about this. So I'll go back to my main question that I hope someone can answer out there. If you're a listener, please jump in into the discussion. If you're a really good builder, a project, an application, why would you build your L3 and be sub and have, to me, sounds like more dependencies and lock-in, whereas you can build your own L2 like Base did using the OP stack, or heck, even build your own L1.
Here's the thesis, which is that if you go fork the OP stack, you're then trying to create your own ecosystem of liquidity over here. But if you just go build on Arbitrum, or you go build on top of Optimism. Let's say you become an L3 on top of Optimism. You now have like interconnectedness of liquidity with everything else on Optimism. But if you
Is
fork,
it?
I think so,
Like,
right?
what
Like
is the distinction between the interconnectedness horizontally versus vertically?
I really
L3
don't.
being vertical versus not horizontally. Like,
I mean, if you
that's where
fork, like,
I'm lost on this.
let's say you build on the what's OP's thing, OP Superchain or whatever it's called, like, and you go
Mhm.
build your own L2. You now are not. I'm again, I really don't know, but I think you're not connected to like the look. You're kind of fragmenting the liquidity there. Whereas if you build an L3 on top of Optimism, maybe it's that you get interconnectedness with everyone building on Optimism. I'm out of my depths.
Yeah, we're out of it. Yeah.
Here's a cynical take on this is that L3s are only exist because L2s don't know what their business model is, and L2s need basically L3s are a marketing thing created by the L2s because they didn't have a good business model and they needed more value accrual to the L2. And so if you look at like why L3s maybe exist, maybe it's a marketing thing that the L2s have kind of pushed onto crypto Twitter and the industry to drive more value landing on the L2 instead of on on the L1. And that is a
Or on the
really
app instead of the L2. Like, if you're what you're saying is like if you're a good app, mind you, in base, there's a lot of apps on
yeah.
Arbitrum, DeFi ecosystems, and all of them. Is like a perp protocol going to build their own L3? I just like I
Let
don't
me
see it.
what is the impact? Okay, let's say all these L3s. I can't wait for just us to get shredded on Twitter and YouTube from this conversation.
This is
But
what I do. This. I'd love to be
this
shredded because I'm
yeah, I
yeah. I'm just this
clearly
is
we
why
don't
I'm
know.
only posing.
Let me
I'm only posing questions. Yeah.
yeah. Let me again, I'm just gonna try to play the cynical person here. If all let's say fast forward, let's say all these L3s actually take off. More and more of the fees on Ethereum. Wait, I'm trying to think this out. Ethereum's gonna start earning less and less and less fees. And if it's earning less and less and less fees, and the fees are kind of like I'm making up this word like landing on the L2 instead of landing back at the L1, perhaps the value of ETH drops. And then
Hmm.
it kind of creates this really negative feedback loop where like maybe people start to get spooked. The validators no longer are willing to hold ETH and they're no longer willing to secure the network. And you lose this idea of
Hmm.
like, oh, maybe the Ethereum security is not the end all be all. So I think while these L3s are
Yeah,
maybe a good idea for the L2s in the short run, long term, I think it's easy to be cynical on it.
I think it's an excellent point. At what point? I think that time and time again we hear this like users and liquidity is where is on Ethereum, EVM. I get it. Today is true. You're not building for the state of the world today. You're building for state of the future. If you're a really good product, which we haven't really seen, you're going to attract a lot of users and liquidity directly to your app. You control that. You control that user. Why not go build your own L1? We're like talking about like micro usage right now in the grand scheme of things. The only reason we're all here is because we believe that this actually becomes like an incredible extension of the internet. We haven't really seen that yet, but somehow we're like caught into these debates of scalability and saying that Ethereum's like the winner or like the dominant chain. Certainly, it's starting to be like contested very easily in terms of usage, in terms of fees. Solana, for instance, has had multiple days now where the fees there um, has been higher than Ethereum. So your question's a really good one, which is where does if an L3, an L4, an L5, an L27, whatever, at what point does if the value capture sits on the L2 or higher up the stack, um, at what point does it is it just economically and more importantly like the security starts to kind of fall apart and you'd rather build your own L1 because you become like the value's there, so you just drop into an L1, right? Um, my simple thesis for something like Solana is that like, and Mert, credit to Mert because he actually was the first one to come up with this. He said like the scalability trilemma, which we've always go back to. It says, security, decentralization. What is it? Security, decentralization, and um, scalability. I believe is one of those things. I think it's those three. Um, and you can like do some trade-offs around the continuum. But it's like I simplistically today, the way I think about it is the most secure chain would be the one that has the most killer products because that creates more fees. Assuming that the fee captures worked out. Not every chain is figured out. By the way, no chain is perfect in terms of fee markets. They're all kind of trying to like optimize it. As Ethereum has done it with the IP 1559, which I think is really novel. I think Solana will have to do that. It's figuring that out. Other chains will probably have to do that as well. But like, if you, it's not a bad problem to have. Like, if you have a lot of demand and usage, then that creates a robust fee market, right? That creates more security because the validators you incentivize validators naturally to come to your chain, earn fees, and then but begins and ends with you have to have killer applications. You have to have performance, and that means user experience today is far superior in Solana. I think base is not bad. Like these L2s are not bad. I don't want to come across as negatively critical of L2s, but I just think that the integrated design today is more elegant and more clean for the user as opposed to having a bridge across. Cosmos has this problem too, not just Ethereum. Um, and so I think users naturally always gravitate to where the easiest. They don't have to think about this stuff, right? Maybe in 6 months or a year, like this connectivity across L2s, L3s, L27s, like is like totally abstracted away. It's super clean. Then that I'll revisit my thesis. But and let me ask you a question: would you agree or disagree that it's just a cleaner experience in Solana? You don't have to think about bridging across base and Arbitrum and
I think
start.
so. I think so right now, but like Solana is one cycle behind ETH, and ultimately there's going to have to be Solana L2s. Like if you talk to a lot of the, if you talk, you don't think so?
We had this discussion in London. I think the drip was it Vishu?
Vibu or whatever.
Vivu, yeah, Vivu and the tensor. Like, I think there's been discussion around it. I tweeted about it. I think that thread has really good, healthy debate. So we should
Oh, I
link
didn't
to
see
that.
that. All right.
Yeah, yeah, I tweeted about it right after DAS. Um, I don't think it solves ultimately much. Maybe for drip, but I came away after reading all the comments. Austin, for instance, commented in there. I thought that was one of the best responses there. So if we can pull it up or just link to it. But I agree with his take, which is they're not solving the current issue and bottleneck constraints that Solana has right now. When I say bottleneck,
Mm.
it's sort of like the fees. Um, so, anyways, the value, Tushar and the Multicoin guys, like again, come out and I actually do agree with their take, and they've been saying it for years. You value an L1 based on the MEV capture. Um, MEV capture in Solana is going to continue to be actually more and more interesting and robust. You're already seeing that with Jito. In Ethereum, um, where's the MEV going to be captured? Like sequencers, centralized sequencers are actually capturing a lot. So yeah, I think
You
the
value an
block space of
L1
Ethereum.
based on all the MEV capture. I think that's trying to uh I disagree with that. I think that's trying to
Okay,
put some like TradFi framework basically of like valuation on top of an L1. Like how do ETH or
you
Sol or whatever, like they're valued the same way that you value like grain or gold or oil. They're just commodities. Like Sol is just a commodity. So any like ETH is at least in my mind, it's just a commodity. So any like if you look at how people, people don't talk about soybeans or whatever. Like they're not or oil. They're not like, oh, look at the P&L of oil today. They're like, oh, there's a supply shock happening to oil today.
supply and
Uh,
demand. Yeah,
OPEC
look at it.
cut this thing, or there's something happened
Okay,
in
okay,
China.
but the like oil markets, for instance, there is nuance where the value capture happens. EMP, like exploration, has been really challenged. Most like a lot of people go bankrupt there because you have to be really right. But like the refinery process, the refinement of crude into like higher, like you know, that's where most of the value is captured. So you think holistically of the oil markets, not just oil itself, is what I'm saying. Like the whole ecosystem, like the whole energy, like oil and gas industry, and think about like where's value. being created? Like, where's the highest margin stuff? Anyways, it's like a loose analogy. I don't want to go into it, um, but yeah, yeah,
Yeah.
I don't know. I'll just go back to I would love to better understand, and hopefully someone can jump in here and just make the case of the need for an L3 in the context of base used the OP stack, built their own L2. And can someone also just tell me why base at some point won't even launch their own L1?
Yeah. We have I wanna get Steven from Arbitrum's take on this. They have Arbitrum's I think it's Stylus. And
Stylus.
and the reason I want to pick on him is I think they have the most capital deployed on Arbitrum right now. I'm pretty sure, and the most number of apps that have built on Arbitrum. I'm pretty sure about that.
Mm,
In terms of like all the folks who have their like kind of go launch an L3 platforms. So
got it.
maybe we could do like Steven and someone else
Yeah,
as
yeah.
well. Hey everyone, wanted to give a big shout out to today's sponsor, Wormhole Foundation, stewards of the Wormhole protocol. If you are like Santi and I and you play around on chain, you know how bad the cross-chain experience is today. Well, Wormhole has set out to solve that, powering cross-chain transfers for over 200 different multi-chain teams, including some of the best like Uniswap and Circle. So what does that mean for you, the Empire listener? This opens up a huge number of multi-chain use cases across DeFi, NFTs, governance, oracles, and more. By supporting over 30 different blockchains and 6 different runtimes, including Sui, Solana, different ETH L2s, Ethereum, and a whole bunch more, that means you have now the most powerful interoperability platform at your fingertips. If you're a developer, you'll be excited to hear that Wormhole provides an extensive suite of tools and infrastructure so that you can securely build multi-chain applications. But don't just take our word for it, obviously. Wormhole Protocol leads the industry in all-time messages transferred with over 900 million cross-chain messages. 900 million, that is close to a billion, and that's a big number of messages. As a thank you, Wormhole Foundation is dropping exclusive NFTs. That's right. We got some exclusive NFTs for Empire listeners. Hit the link in the description to claim your unique Wormhole NFT today. This episode is brought to you by Monad. Monad's thesis is simple. The EVM is here to stay, similar to JavaScript and Web 2, but unfortunately, today's EVM lacks the high performance and the scalability that developers need to make certain applications possible. Monad addresses these concerns and these bottlenecks while preserving seamless EVM composability for application developers. There's a seamless transition to Monad as the Ethereum RPC API allows for really easy portability. And for developers, Monad can support 10,000 real transactions per second with their unique parallel execution environment. And of course, there's full compatibility with EVM bytecode. Monad's internal DevNet is live. Public testnet comes out soon. You can join Monad's journey in 2 ways. One, go follow them. They're on Twitter at Monad, MONAD_XYZ. And also join the Monad Discord. It's discord.gg/Monad. Big thanks to Monad for sponsoring Empire. The last thing I'd say on this topic is like I noticed that there was a lot of hate around Blast. There's the Munchables hack, and there's I think $62 or $63 million hack, and people were like, "Do you let the hack happen, or do you roll back the chain?" And then people were commenting saying, "Look, if Blast rolls back the chain, you'll see how centralized it really is, so they can't do that." And I would just remind people the difference between Blast and Base and Binance Smart Chain is slim to nothing. It
That's
is
right.
it is brand. It is brand. And you don't have to take my it's not my take for that. I think that folks at L2 Beat do a really good job of that. There's for anyone watching on YouTube, you can see it right here. But like you look at Base, so L2 Beat has these different stages and then different risks, right? So this is Base. They've got 3 out of 5 are red, 2 out of 5 are green. Same with Blast, stage 0. Items missing for stage 1, they've got 3 X's. Proof system still under development? No. User withdrawals can be censored by the permissioned operators? No. Or yes. Upgrades executed by actors, et cetera. Yes. So exact same thing. There's no
Yeah.
difference between these two.
So you're
So
saying,
yeah,
yeah.
I would just remind OP as well. So as L2 Beat lays it out, the only folks who have moved into stage one, it's Arbitrum, DYDX, and ZK Sync here. So everyone
The
else
biggest
is,
distinction there are fraud proofs.
yeah.
Anyways, I think yeah, I look at some point you know Blast has been Anatoly had a good tweet this week about um you know the criticisms of Solana being higher hardware requirements, more centralized, and the fact that they've always been very explicit about that and upfront, whereas his criticism was exactly this with Ethereum. It's sort of they haven't been upfront about this, about the L2s and how they don't have fraud proofs. If an L2 doesn't have a fraud proof, you're at risk. You're beholden to them. They have fraud proofs, but they have a centralized sequencer. The sequencer is largely irrelevant for security. Just more value capture to a particular party. It's a centralized, but ultimately you can always revert back to the L1. You don't risk that. You don't have a fraud proof. It's no different than a multi-sig in terms of the actual impact implication for the user. And look, I get it. Blast is in development. They're moving at a pretty fast pace. And yeah, in the roadmap, you have to build fraud proofs. Optimism has been around for what, the longest? What are the fraud proofs? I will constantly I you know I won't get tired of saying it. Now, someone said that they built it, they've been like in development or some early form. But I'm like, it's been a couple of years. I know it's difficult, but it's been a couple of years. Like yeah, it's concerning, right?
Yeah.
I mean, not to just throw shade on one particular. It's just as a matter of principle, like just fraud proofs are essential. Otherwise, it's a multi-sig. Like if you're upfront about being a multi-sig, and at least like it's better to be very upfront. I'm. Let me ask you a question: if you were to survey all the users that have deployed into Optimism, would you think that they, like, if you asked them about fraud proofs, do you think that they would understand that? Do you think they'd understand that it's the implications
dude,
of that?
I don't think they care. I don't.
How many?
I
But
truly don't think they care.
but if you compare the percentage, if you ask the same question, like what percentage of people that are deploying in a blast would appreciate that it's a multi-sig? Probably higher, right?
Yeah.
Yeah, there's a lot of criticism in the launch. If they rephrase it, they came out of it. Look, it's not perfect, but you want to see that. Anyways, I'm not like just defending my bags. You talked about how Blast was being like blasted and put on like the pitchforks and whatever, but like they've been upfront about the fact that it's a multi-sig.
So yeah.
Whereas like I get it at some point. At some point, if Blast has a chance to be successful, fraud proofs are essential. Essential.
Yeah, agreed. I mean, look, it's what we're agreeing, right? I'm just saying, like, the decentralization narrative that most of the L2s promote is, I mean, at this point in time, it's not true, right? A lot of them are just highly centralized, and some of the biggest ones haven't implemented fraud proofs, and
Yeah.
yeah, we're agreeing.
And look, I don't want to be cynical. I'm just laying out. I understand that there's development to
I
work
think
towards, and
fraud
I
proofs
understand these
did,
things are.
to defend them. I think they did implement fraud proofs on testnet recently.
I believe so. Yes, that's
Yeah.
correct. That's what I verified this. So I've been told this by multiple people, especially at DAS. So I may be speaking out of turn now, but I just generally think that I appreciate these things are hard to build. They take time. And I know there's a team and there's teams that are devoted to figuring this stuff out. I don't want to imply that there's not. It's just, but the reality is just let's just call a spade a spade.
Yeah.
That's the point that I'm making. That people have a way to focus too much on criticizing other projects, whether it's meme coins, whether it's an ETH killer, whether it's whatever. Like focus as a matter of principle, focus less on criticizing others and just internalize, do introspection, and figure out what you need to work on yourself. That applies to L2s and everything else in life. like, you know, like just don't throw stones if you have sinned. Like that story in whatever the Bible. I'm not religious at all, but you know what I mean. Like Yeah.
Let's pivot.
We need. Let's pivot for
Echo.
sure.
Echo.xyz.
Echo.
Kobe's
Echo.
project.
Yeah.
You guys had a nice little thing. What's your company project? What are we calling it? Bid Club.
I'm also an Echo.
All right. Are they similar, different? So all right. So all
I
right. So
think no,
Bid
no,
Club.
they're different.
So Bid Club. Okay.
Bid
So
Club.
I'll do your shill for you, which is there's something on Twitter today. It said announcing Bid Club's founding members. Bid Club is a membership based investment idea sharing platform for longer form theses around publicly listed cryptocurrencies. Now in closed beta, looking for our next cohort of members. Bid Club's founding members: Arthur from Defiance, Jason Choi, Avi Fellman, James. And Vincent from
Oh,
Modular Cap.
from
Great
Mojo.
guys. Jason Cam, Andrew Kang, Kyle Samani, Santi, Daryl, Zero X Mangarian, and the last guy who I don't know, Tanthai. Um, so those are
Mm-hmm.
so that's Bid Club. Then Kobe
Yeah.
also announced something fairly
Echo.
recently, which is Echo.xyz.
Mm-hmm.
I think the best way to describe it is maybe like a crypto only like angel investment platform, or maybe like a crypto only angel list, maybe is the right
Yeah.
way to describe it. But what are your thoughts? I'd love to hear the thesis for Bid Club, and then B, I'd love
Yeah.
to hear like just your thoughts on Echo.
Yeah. So I'm involved in both. Full disclosure. I think both serve a clear purpose, and they're quite different. Your framework is, I think, correct. Echo is uh, early stage, like an angel list, investing in startups. There are clubs, or I guess groups, and certain personalities and have a group. I sort of missed the deadline because I was too kind of lazy or tied up to connect my Twitter account and all this stuff. But anyways, there's some good syndicates that you can apply to and join. Larry, from the blog, you have Ansem, you have Casey, you have multiple people, Will Price, just a bunch of people that are, I guess, are known or good, have a good reputation being early stage investors that have had these groups and syndicates. So I think of it as angel list. Uh, Bid Club is uh, differentiates into two forms. One, it's more of a discussion debate platform, like idea sharing, not so much like actionable. Like it's not like you're going to send money and fund directly on the platform. It's just meant to be like a place where you can curate a discussion. And there's analogies to these as like public markets, right? Like I forget the platform. Jason knows it's like stock tweets or whatever. Like there's platforms where people share, even conferences where people go to, and there's like hedge fund managers that talk about like pitch public ideas, and then that it's a healthy debate. So I think about like Bit Club as more of a debate club and skewing exclusively to liquid, like projects that have launched. So a lot of what you'll see there now is, there's a post about the thesis for WIF, you know, there's a thesis for Solana, there's a thesis for you name it, but it's only liquid tokens. So they're quite different in that sense.
So on Echo, do like you can follow different? What's the problem that Echo's trying to solve? It's that a lot of the angel deals right now are very private, and
Yeah, it's trying to democratize access to early stage investing
it's
in
funny in a
crypto.
way. ICOs, they really were the fairest option here.
Kind of, yeah.
Yeah.
Like ICOs with certain modifications, I think, would be the purest expression of just opening up access. I think you have, tweaks in saying like in terms of just um, standardizing disclosures and you know but yeah, I don't disagree with that at all, actually. Kane and other people have been kind of vocal about like revisiting the idea of an ICO.
Yeah. What's your vision for Bid Club? Like, how involved are you?
No, 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 oh, sorry, and just one point which ties into the discussion we're talking about, like fully diluted versus circulating. Like ICOs had more of the tokens circulating out of the gate, better price discovery.
Yeah.
So, anyways, yeah, you hear these criticisms time and time again, like retail, quote unquote, not institutional investors can't invest in these projects because they maybe not fall under the accreditation, or even if they're not in the accreditation, they're not like invited to invest in these rounds. And so, yeah, I think Kobe's sort of taken that stance and wants to take a crack at it, which is yeah, why I'm excited about,
Yeah.
exploring that. The thesis for uh, Bit Club, I'm excited because I've, for a while now, have found public markets more intellectually engaging and fun than early stage. Even though I still do a lot of early stage, I've most of now I'm thinking about my like public opportunities, like liquid tokens. And I just think that it's I never thought I'd be like a quote unquote hedge fund guy. My background, my training has been in venture, cryptos both, obviously. But I think a lot of opportunities are in the public markets, like liquid tokens. I think it's an area that, on a relative basis, is probably underlooked by institutions. There's some guys like the Mojo guys, Reflexive, um, Multicoin does some of this. Like some funds like have a liquid strategy attached to them, but I think in the grand scheme of things, there's way too much emphasis from investors, institutional investors in the space and early stage opportunities, not so much in public markets. And I think there's an incredible amount of opportunities there that retail has access to. So
Yeah.
the nice thing, there's like that joke, right? That the VC lives the best life. He gets to invest and wait 10 years to be proven correct or not. In traditional venture, crypto is earlier, right? Because you might have invested in Wormhole or Athena 6 months ago, and now you have a token. So the market, then and there, I guess it's much faster. But um, you know, I think public markets are really cool and more intellectually stimulating, at least for me, because you know it's a bit more daunting, I guess. You invest in something, it goes down like 60%, 70% overnight. Like when I first invested in WIF, I think like it went down like 60%. Like woke up and I was like, okay, yeah, this is definitely a volatile thing. I was on this podcast being, when it first hit $1, when it first hit two, right? You could see me worked up. Like, what should I do? Right? It's already up a lot. Like, how should I manage that? And instead of running away from that, historically, I had run away from that because I now pay more attention to that. And I think it's like even this experiment with trading meme coins, I funded like some random wallets, like as experiments. They're no longer small experiments, but that process I think has allowed me to like just develop another muscle as an investor that it's less developed in venture, and I quite like that. I've really enjoyed that experience. And I think it will help serve me well even for early stage investing, but also just to apply it. Like I have now a more growing desire to spend more and more time in liquids because I'm now
Hmm.
just really, really convinced it's very overlooked. That's where I want to spend most of my, like said differently. If I were to start a fund today, like raise money, I would spend more than 50% of my time on liquid
But how much
because
of that? But
it's way more scalable strategy. Like you could raise
yeah.
$1 billion today and deploy in liquid. Paradigm's now trying to raise 850. How much of that's going to go into privates? Like that's just
Yeah.
not going to bode well for all
But
the
how
other
much of that is
cats.
a factor of where we're at in the cycle, right? Like the venture deals have gotten now pretty
Yeah,
ridiculous. Like,
true, true, true. Like they will certainly be able to deploy 850, maybe across two cycles. Like Multicoin today just announced like invested over $200 million in Wormhole. Yeah, you do for those deals. You wouldn't, right, from a concentration standpoint. But you're right. You're starting to see now more and more the 200, the five. We're going to see $1 billion raise, right? So I just think that historically a lot of that capital has flown into privates that have a long duration. They carry a lot of risks, whether you want to think about them or not. Whereas public, I think, is way more scalable and more actionable. Like you can deploy over multiple billions of dollars into something like Solana on a risk-adjusted basis. Is it going to outperform most stuff? Probably. None of this financial. Is just like as an example, hypothetical, or some of the large, like the top 50 tokens by market cap, like they're over $1 billion, right? You can buy 5% of that token supply fairly easily and run a fairly concentrated book and all liquid. You don't have redemption necessarily risk or as much. You can be more tactical. Yeah. Maybe no one will give me money because they're like, no, most of your success has been in early stage, which is partially true. But yeah, no, I really think it's an area that is overlooked. So when I met the modular guys, when I met Jason, how involved I am at Bit Club, I'm a Jason came to me. I think it was the first or second person he came to, and then we selected some of the other members in there. But we were very thoughtful around the people that are in there are typically guys that are have their own are fund managers, and they are vocal and invest in liquid stuff. That was the criteria. There was a lot of other people that could have fit that bill, but they were just not active in the public markets, and so liquid markets, I'd say, and so they were just they're just not meant for the platform. So what we envision doing this is like token 2049 in Dubai is a little too close, but like sometime like maybe permissionless, or maybe some of these conferences where you have a zone type. Zone conference is really cool. Like you have some of the best investors like Stan or Camilla go and they pitch their ideas. There's private dinners that hedge fund managers do, and like they kind of they have to come with an idea and they can be picked apart, right? So that's I like debate. I like that type of debate. Um, and so I envisioned Bit Club taking that type of form, like online platform for very high caliber discussion on ideas, more curated, more sophisticated than crypto Twitter. Um, and then a component of in person, which you guys are experts on. We've talked about this, right? Layering it as a side event in some of your conferences would be pretty cool. Have local clubs where people can go to and learn about this stuff and debate. And a big part of this, and where I've spent a lot of time with Jason, is the disclosure component. Like I'm always very uneasy. I think we don't get as many views as some other podcasts in crypto because we're not here telling you we're not talking about prices as much. We've been spending 30 minutes on L3s. I mean, people are already snoozing at that point, right? They want an idea. I need to buy. Am I going to buy Wormhole? Yes or no? Am I going to buy, Athena? Yes or no? People want to be spoon fed. I don't like to do that. You don't like to do that for obvious reasons. But I think there's a time and a place for that, and I'm hopeful that Big Club is that.
Nice.
And
That's cool. I like
I'm
that a
looking
lot.
forward to it because I hope that I have like I hope that I can do that in a way that you know I'm probably still going to be cautious, but I hope that I can do that, and it encourages me to be structured and standardized. Like if you're going to pitch an idea, it has to follow a certain format. If you're ever selling, if you're ever doing stuff like, and so it's just nice to have that type of template, right? Because it's written. I think these things, ideas should be structured as memos, the same way that you would do it at a fund, well documented. People can read about it and comment and see all the disclaimers and disclosures. Whereas in a podcast, you're going to miss some of that, right? And it's
Yeah.
better to be in written form.
Cool. I like it. Let's do it at
Yeah,
permissionless. I think it's a good idea.
let's
I
do
think
it.
it's really
Yeah,
cool.
I think so.
Yeah.
Yeah, yeah. Like the same way that we did that meetup, but like maybe just a meetup for Bit Club members that have been active in the platform. And
Well,
I'm actually really
maybe there's
excited
a
to see some
way.
people.
We're doing 0x day. So like permissionless is 3 days, but there's day zero, which is 0x day. It's basically uh for Blockworks research subscribers. And we're gonna
I see.
bring a lot of the big allocators in the industry. And maybe we can
Right.
combine forces in that way, but that's cool.
Yeah, yeah.
Um
That's cool.
there was
Investing is a social sport.
Yeah. And even more so in crypto. So all right, there's one last piece of news, actually non-crypto, that I
Uh,
thought was cool this week, which was so there's a the biggest prediction market company I think out there is not Polymarket. It's actually this thing called Kalshi. Um,
mm,
like outside of like the kind of offshore Costa Rica ones, but there's one called Kalshi, and they've tried to do everything like right in the regulated way. They've raised some venture money. They've like waited to get the regulations, and actually they had
they're
a
based
really
in
cool.
LA. They raised from A16Z, I think.
I think so. I think so. They
Yeah.
had a really cool announcement today, which is that so the problem with prediction markets is that there's no liquidity. Like there's no real players and there's no liquidity, and like they're just these like tiny, tiny, tiny markets. Um,
Yeah.
and liquidity begets liquidity, but same thing on the other side, right? So when you don't have liquidity, it
Hmm.
gets tough. So
Terrible. Yeah.
yeah, so today actually they announced that Susquehanna became Susquehanna is one of the biggest market makers in the world.
Hmm.
Susquehanna became the first institutional market maker to commit to actually making markets on Kalshi. And there's this
In the
post from the
election.
founder, Tarek, which is look, SIG Susquehanna, I think probably Susquehanna Investment Group has trades 2 trillion in yearly volume, one of the largest market makers in the world. First time in history that big institutional Wall Street market making firm is now committing to make markets on a prediction market
Mm-hmm.
platform. And actually, the impact on this is on Kalshi, you used to only be able to trade 1,000 shares at a time. You can now trade
No,
100,000 shares at a time.
100,000.
Um,
Yeah.
and actually, in Susquehanna's announcement, they said, "Yeah, we're going to be making markets for everything from monetary policy swings to Taylor Swift's album
Yeah.
performance." So
Right. Absolutely.
I think it's great. I
It's
think it's really, really cool. And I
yeah.
think what's happening is they realize the demand that's going to be there for the presidential
Oh yeah.
election. Um,
Absolutely.
so
Absolutely. Yeah. Yeah. I have two thoughts on this. One, I was skiing with a group of older folks, all American, last week, and
like all
we were talking
American
natural,
skiers.
like they're like
Oh,
they're
they're
good
all
skiers, but not
American.
like
I get it.
they're all American. And of course, we politics always comes up at the table. Like, here we go. I said like 20 minutes in, I was like savoring the comment. I'm like, guys, I just sent them the link. It's like, check this out. I sent them the link in Polymarket, the politics page, and then they were like they were like fascinated by it. They couldn't stop talking about it the rest of the week. They're like, oh my god, they like, and I'm like, it adds just a lot of really good signal and just data, right? It's like $100 million market. Like, stop pontificating. No one cares what you think, John or Joe the plumber. Look at the prediction market. Who's going to be the nominee? Like, they were talking about like who's going to be the nominee for Trump. I'm like, go look at the prediction market. Uh, it's not going to be Nate Silver, and it's not going to be CNN and all the political pundits that have gotten it wrong time and time again in the last couple elections. It's just been harder because it's voter apathy. The market, the country's more like polarized now, right? People are like afraid to tell you they're a Trump voter, they're secretly Trump voters, whatever. So, anyways, prediction markets, I think, are probably going to be one of those things that are like, I just find it fascinating, and they're probably going to be the top three consumer app like crypto. So it's really cool to see. The other point I wanted to make around this was, yeah, this is just the page that I just sent people, and it's like it's a huge hook.
There's a hundred
Um,
million, $100 million on this on Polymarket.
yeah, yeah, yeah. That's the main market. Yeah, I think it's the largest. Yeah, so it's not small.
Yeah.
Like, who are you going to trust? CNN pollsters or the prediction market that has 100 million behind it? You know what I mean?
Yeah.
Um, I
Huh.
think that there's an interesting flavor now. Just of course we got to finish the podcast where we ended it with meme coins, like Bowden and Trump. I think they're and full disclosure, I invested in a project just recently that is going to launch. That it takes a combination of what you're seeing with these meme coins that are representing outcomes in a way, signaling interest, right? There's a Trump meme coin, there's a Bowden meme coin that has wild swings when they come out, right? There's debates or whatever. Combine the two. Imagine, so the challenge in poly market and just prediction markets is you need a lot of liquidity, as you said. But if you combine like the meme coin aspect of it, like what you're seeing with Trump and Bowden, into a prediction market, anyone can create it, anyone can launch a meme coin of sorts, but like you attach more of the outcome component to it. I think you're
Interesting.
gonna the goal is to have not just one $100 million market. Like, why not create attach onto memes have been incredibly good to scale and attract a lot of liquidity. Combine that in a more prediction market type of platform. So that was my idea that I had. I'm kind of incubating this thing, but not so much. Like, not I was involved in the kind of the idea generation of some elements of it. They came to me and I said, "That's amazing, super impressive," and then we kind of like worked it through. So I'm hopeful it will work because I just want to see more
That's
larger
cool.
markets.
Yeah, I mean, the counter is that the only thing people like betting markets and prediction markets, people talk about them. I would love for a prediction market to take off. The counter is that every 4 years people talk about prediction markets, election years, and then it goes away, right?
Well, yeah, but like people were also want to maybe do
Bet on sports.
there's other stuff, right? Yeah, I mean the
Will
sports
Taylor
schedule is,
Swift
but you
tickets
can
sell for more than $10,000? Yeah,
yeah, discrete things. Uh, I mean that's option markets in a way, right?
yeah,
And
yeah,
derivatives. It's the notional value that is like orders of magnitude more.
yeah.
So yeah, we'll
Cool.
see. It's interesting though. Like suffice to say, I ended the discussion with these folks. I'm like, listen, guys, I probably will be. You look at Trump. Two things like who's going to win the election. I was like, oh well, probably look at the Trump meme coin performance as a good indicator and interest, but also like Trump had recently launched his SPAC, right? I was like, look at option volume expiring November, December, and January. because if there's a huge spike, someone knows something, and Trump's gonna win, right? The huge donor or whatever, like Bill Ackman's on the back end buying like all the way out of the money call options in the Trump SPAC. Like, if there's a huge spike, I'm like, yeah, I think Trump's gonna win or whatever. Anyways, none of this political, legal, religious, or any financial advice for that matter. You shouldn't listen to this. You should post answers to the L3 discussion, which is more relevant to any of this.
Did you see that? Did you see the thing about Amazon? So Amazon. I don't have a content. I don't have a content of the week this week, but my story of the week is, so there's this Amazon launched these stores like, I don't know, 5 or 6 or 7 years ago, and I remember going to one of the first ones in New York. Let's call it in 2016 or 2017, and basically
Mm,
there are these employee list stores where it was a full self checkout store. It was crazy. You get a basket and you'd put in your tomato sauce and your pasta and your oranges and your bananas and your milk, and you just walk out of the store and it would automatically charge. It would automatically charge your like Amazon account, I think it was, and you had to have the Amazon
yeah.
account app on your phone. I was like, wow, this is the future. It
Did you
just
use your palm, or were you using
it
a cell
wasn't your
phone?
palm. You'd have your phone in your pocket
Oh, you checking it, open a gate.
and you'd walk in and it would like scan your phone in your pocket, kind of like walking through a subway turnstile. And I was like, man, this is the future of shopping. This is crazy. It was like so efficient. It turns out there's a story that came out this week. The way they were doing this is they had thousands of employees in India and they had video cameras, like hundreds of video cameras in each store that were just these tiny little video cameras. And so the people in India, I'd take a tomato sauce off the shelf and put it in my grocery cart, and the person in India was just being like, tomato sauce, adding it to my cart in Amazon, basically, and then
Oh
charging based
god.
on that. So it was just completely manual work, and I think they're shutting these stores down, and yeah, but
State,
just
st- state,
comical.
state of the AI market. Fake it till you make it, I
Make
guess.
it till you make it. Yeah, you think crypto's bad? Yeah.
Cool. Well, last thing, content of the week. Well, two things. Two things. I did finish reading the Chris Dixon Read Write Own. Really good. That will become a staple of the book that I share with. Someone was asking me here. I'm again skiing this week, and someone was saying, I'm releasing crypto. What should I do? And historically, I've given them the Bitcoin Standard, which I think is like a very good book as an introduction by Safi.
Saifuddin
I'm gonna butcher
Amus,
his last name.
whatever his name.
Saifedean. Yeah, yeah. Apologies. And now Chris's book. It's very good, very articulate. So those two I think will become my staple, my
Nice.
go-to.
Nice. That's great. I forgot to plug Empire newsletter launched this week. Shout out to the Blockworks news team. It was really good. Yeah, shout out David and Casey and Catherine and McSweeney and everyone who worked on that. So if you're not subbed, go
Amazing.
sub. Joseph, let's put a link at the top of the description. Last time you put it all the way at the bottom. Let's put it at the top. But yeah, thanks for listening, folks. Hope you guys are enjoying
Yes.
the
Yeah.
newsletter. Santi, enjoy the slopes.
Thank you, sir. Thanks everyone for tuning in. Looking forward to reading the comments in this one in particular.
God, I'm going to get shredded. Shouldn't have even hit record on this. All right. See you, folks. See you next week. Hey, everyone. Thanks for tuning in to today's episode. Don't forget to claim your free Wormhole NFT exclusive to Empire listeners. Hit the link in the description of today's episode and fill out the form to claim your unique Wormhole NFT today.